This may have been one of the most interesting months for stats in Toronto real estate in many years. Going through the data, there's a few things that stand out that I don't feel like has been talked enough, but also things that you should know if you're a buyer or seller looking to make a move in the next 6 to 12 months. Let's look at the data from a couple different perspectives, and I'll tell you what exactly I've been seeing with my buyers and sellers in today's market. Let's start here with GTA market stats. We're gonna talk about the GTA, we're gonna talk about Toronto like we always do. There's something here that stands out so much so far, and the first one is months of inventory. So before we get into sales are up, prices are down, let's talk about months of inventory and what that actually means. Taking the active listings divided by sales gives us a number. The higher the number, if we're in the 5 to 6 months of inventory, that brings us into a buyer's market. If we're in the 3 to 5 months of inventory, we are in a balanced market, and anything at basically in the 2s or below, we're in a seller's market. 4.04 months of inventory is the lowest months of inventory we have seen in quite some time. And what that typically means is that if the months of inventory keeps contracting, generally prices will follow because the demand is still there. And basically the easiest way to think about it is 1 in 4 properties are selling. If we take a look at the average price, down 4% from last year, down about 130,000 from 2023. And we will talk about where things have been in the last few years for June's as well. June's a pretty important month across the board for the last few years, especially coming off of the peak. If we take a look at the active listings, 27,000 active listings, down about 13% from last year. That 27,000 active listings is down from last year, and the number of sales up from last year. Now here's the caveat. Last year was one of the slowest real estate months in history. So even though we're up from last year, there's not really much there to talk about because we're not quite where we were in the past. That being said, we have also passed 2024, and that was actually a pretty good spring market. If we take a look at 23 though, almost 1,000 extra sales in the month of June. The start of 2023 was a very hot year for real estate, and we'll look at that in one of these upcoming charts. Jumping over to Toronto, pretty similar story. 4 months of inventory, average price down about 5% from where it was last year, but notably the price down about 80,000 from 2023, and the GTA was down about 130,000. So the gap is definitely not as big Toronto-wide. We look at the active listings, and this is one of the numbers that stands out quite a bit. We are down 14% active listings in the city of Toronto, and a big factor of that is most of those active listings are condos in today's market. The freehold properties are definitely lower than condos right now. So with those numbers coming down from an active listings perspective, there's still a lot of inventory out there, but if you're looking for a low-rise property, a house or a semi-detached or detached in the city of Toronto right now, it's competitive out there because the ones that come up for sale in the best areas, there's really not a ton of them out there. You might get one every week or one every couple of weeks. If we look at the number of sales, up 6% from last year. Again, last year was a slower year, but Toronto-wide, like we're really not too far off where things were in 2023, which as mentioned was a hot year for real estate in the spring market. June typically marks the end of the spring market. Now that we're in July, this is the official summer market. So here's some of the data that I'm finding really interesting as we go. First of all, this months of inventory, 4 months of inventory is the lowest we've seen in the last 12 months. So again, that's taking the active listings divided by sales. This month for sales, and this is one of the first times we've seen this in a few years now, we've seen multiple consecutive months where sales have been increasing. Going from basically every month this year, we've seen sales grow month after month. If we're looking at active listings, those have been relatively stable here in the high 20,000-ish range for the last couple of months, but definitely not the peak of where it was last year at 31,000 active listings. Typically, this is what happens is everyone hears that the market is slow. They decide that they don't want to sell their property because they're hearing that things aren't really moving. So then those properties never actually come to market. But as buyers are out there looking for the product that most buyers want to buy, and here's something that I notice on the ground level, most buyers want the same product. So if there's 5 houses on the market and one of them sells right away, the chances are is most buyers have all gone towards that same one house. And that's pretty much what we're seeing across the board, whether it's a house or a condo. So as we keep seeing those sales increasing month over month, I'm not sure how July will play out as we go, but it is something that we haven't seen even all of last year. We've never seen that many months of consecutive sales rising. Months of inventory, again, lowest we've seen. And this is one thing that did stand out the most. So at the start of the video, I said there's something that stood out last year. Last year, June was the highest price point that we saw for the rest of the year. So as the year went on, from June all the way to basically February, every single month went down in value pretty much across the board. Of course, August was the lowest here, but pretty much across the board, little bump in the fall. But then again, again, June was still the highest by almost about $50,000. So that's something to note. And we're still not quite at the June number from last year, which was 1.101. And we still haven't even got back to that June number from last year, which was 1.1. So if sales continue to increase, if the active listings decrease and that months of inventory gets tighter, we may start pushing that number at some point, generally not in the summer, but it could happen as we go. And we're still seeing properties that are moving, and buyers are definitely still out there that have been looking since the spring. I show this chart every single month, and I actually thought it'd be good to mark it up a little bit to really break down what this chart means. And this is a really important chart as we look at the peak of the market back March 2022. And this basically is 4 years of data, 4 years and a couple of months actually. But we're going to start to get to the point where this shark fin here, which started down here and worked its way up to here, is going to be off the board in a few months. One thing we notice is 1.3 million was the peak of the market, and here we're at about $1,050,000. So it's down about $250,000, give or take, let's call it 25-ish%. One thing that no one's really talking about is about 70% or 80% of that decrease happened in the first few months after March. So going from March down to basically June, July of 2022, that was quite a decrease. And as we keep moving forward here, this chart's going to look relatively flat in a few months. As I keep showing it, these red dots will be kind of in line here around that $1,050,000, 1.1 range. In the blue, we have a good history of where interest rates went and why those prices came down so quickly. The first rate, 0.25, then 0.5, then that 1% jumbo increase, and then another big increase. Then we had 6 months where the rate went from 1.5 to 4.5 on an overnight lending rate. Fastest tightening cycle in modern Canadian history. And the Bank of Canada started holding. When they were holding, and as mentioned in 2023, prices started increasing. It was an active market. This is what happened in the spring market. Things started to move pretty quickly going up. And then again, they raised rates and then prices came down to pretty much the same level they're at today. This is where we're going to call this the market found its footing. So as the Bank of Canada was making adjustments and then held pat and then started lowering as we went, the market was finding its footing in basically price points. Rates came down, activity increased, and then of course we had news of tariffs, and then prices also shut down. It did slow down things from an uncertainty perspective. As we're looking at these charts and we're seeing how all these factors have been coming into play, now what we've seen in the last few months is stability from rates. We're seeing around that 4.5% rate on the fixed side, variable a little bit less than that. But the Bank of Canada has been holding pretty steady. Pricing has been kind of flat. It went up a little bit in the spring, kind of came down a little bit. It's been a pretty balanced market overall. From my experience, as I'm working with buyers and sellers every single day, buyers are looking for the best product available in the price point, and generally they're in competition for the best product. And we've seen this time and time again, multiple offers on specific properties in specific areas here in Toronto and the GTA for that matter, is that prices are still moving well in those best pockets of basically any city in and around for the best properties. In terms of condos, if you have one of the best layouts and you have, for example, 2 bedrooms, parking, great view, great building, great location, those properties are also moving pretty well if they're priced where they need to be for today's market. The condo market is definitely not thriving as much as the low-rise housing market, and that's pretty common, and that's pretty typical of how it's always been, especially if you're looking in the city of Toronto in 5 or 6 of the very best areas. So I mentioned we'd take a look at June versus May for the last few years, because June last year was the highest price point that we saw. In terms of total sales, 6,700. It's actually kind of in line of where things were in 2022 as rates went up and prices came down. Compared to 2021, though, still about a half. And 2023, as mentioned, was a hot year at almost 7,900 sales in June of 2023. Now, if we're taking a look at where things were in May of 2021, 12,000, almost 12,500 sales. So big difference compared to right now. If we're looking at active listings in May of 2021, 10,000. In June of 2021, yeah, again, 10,000. That's about a third of what we're seeing today in today's market. Average time on market is about a month, and list price to sales price, and this is an interesting one, at 98%. Back in 2021, things were selling for about 5% over asking. 2023, almost the same. 2022, things were just flat. And that's where we started to see the market adjusting and things not really popping off as much in June. Now, if we take a look at 98%, and this is something that it's really tough to quantify what that 98% means. And the reason being is because in the city of Toronto, for example, if we do a price change, we typically will cancel and relist the property. And the reason being is because it resets the days on market. If we make that price change and the price comes down, for example, $100,000 and the property sells within 2% of that new price, it would classify as 98% of a sold price. That being said, the property may have started $100,000, $200,000, $300,000 more than what it actually sold for. But if it was canceled and relisted and it still ends up in that 98% range, that's where that comes into play. So it's a bit of a subjective number in that perspective. I will also say that what we're finding in the market is as properties start going down in price, once a buyer comes to the table where they feel that there's value, and I've seen this countless times this year, other buyers come back to the table as well. And we've seen this over and over again where the property sits for 30 days, no activity, buyers make an offer, and all of a sudden there's 3 offers on the property, and then we're in competition all of a sudden, even though it's a stale property. And I feel like the reason being is a lot of buyers think that they have a lot of time to wait till the next property comes up. If the one they still kind of like is available, they'll just wait until they need to make a move on it. And that's an interesting way of thinking, but that's where I also recommend if there's something that checks all the boxes and that someone really likes it and the pricing makes sense, it's better to act on it quicker than later in case somebody else swoops in and now you're in competition for that same property. Another one of the stats that I found so interesting for the month of June is that new listings to date is at 88,000. It's actually the second lowest number we've seen other than 2023. It's far less than 21, far less than 2022, and far less than 24 and 25. It's interesting to see that as we've gone through this year, not as many new listings as maybe people are anticipating. And that's where we're saying how there are still a lot of competition in the best areas. There's really not a lot of product out there across the board. If we're looking at number of sales year to date, 31,000, just a bit above where it was last year. Again, last year wasn't a great year. So we should be beating that year in terms of sales every single month. So I don't really put a lot of perspective into that 9%. What I do know, great properties in great areas are selling very quickly once they get to a price where the buyers feel the value is there. In terms of average sale price year to date, $1,040,000. This is kind of an irrelevant number because the first couple months of the year were really low and then they've gone up a little bit now. So that's a weird number. But anyway, it's in this chart. So thought we'd mention it. And then it doesn't even show May of last year. But yeah, I don't really put a lot of value into this number because the average price is the average price. Every pocket is performing differently and average price factors in every single property type across the board. I feel like as we go through these June numbers, more so than any amount the rest of the year, there's all these different things that are standing out more than more. First of all, condo sales up 14% year over year. And this is material. This means that condos are starting to get a little more confidence and they're starting to move, albeit their pricing is playing a big factor and the type of unit and quality of unit is also playing a big factor. The other piece that's a big factor in that, price is down about 9% year over year. So as prices come down, more buyers are deciding to make the move to get into a condo, especially because the rental market, and I know the media keeps talking about how slow the rental market is, but on all of our rental listings, we have had multiple offers and plenty of showings in the first week. And it's been really hot in the city of Toronto for the best units, for great units. They're moving really quickly right now on the rental market and in competition. So as those numbers for the rent side are still in competition and the buyers say, okay, well, what does it cost to buy a comparable property? We're starting to see that gap start to close quite a bit. And actually, if you go onto my website, I'll drop the link down below. I built a new rent versus buy calculator and you can run those numbers yourself and see where those numbers are actually at. 905 sales up 12%. And we're seeing stuff still moving in the 905, down about 2% on price. So not a huge savings compared to last year. 2%, if you're looking at $1 million property, is $20,000. Of course, it is $20,000, but it's not a super material number when you're talking bigger prices. So that's something to be considering when you are looking to make a move into a detached property in the GTA. And in Toronto, actually prices are up 0.3%, is that pricing is holding in pretty strong for the top level of product, which is generally a detached property. Average price, 1.65 for a Toronto detached, 1.275 basically for a 905 detached. Semi-detached, hottest property in the city. They're holding their values so well. Sales are down about 3% from last year. Actually, I think the reason being is because there's really just not a ton of them out there. Like there are no detached properties in the best areas right now. That's what all the buyers are hunting for. Up 8.4% in sales in the 905. Those prices down about 7%. And then townhouses pretty much flat for the 416 in sales, up 6% in the 905. Pricing up in Toronto, down in the 905. And that's where you can see here on these charts, this is where all the pricing comes in at across the board. I'd like to see this though. This is a really good sign. In one of my previous videos, I talked about the property ladder. This is the property ladder. The condos slide in below the townhouses, which slide in below the semis, which slide in below the detached. And each one is the next jump to the next one. So that is your typical property ladder. Whereas as you get into the 905, you're seeing condos start to lag a little bit compared to townhouses, which are getting closer to the semis. It's still quite a big jump to the detached from there. So it's a big difference outside the city. But in the city of Toronto, you're looking about a $300,000 price jump for each property type. Those are market stats for June, an important month in 2026 Toronto real estate. Let's see if the prices hold as we go through the summer. I'll attach all those links down below in case you're curious on some rent or buy calculators. We have amazing new tools on the website. I'll throw everything down below. You can click on any of those links. I'm Michael Ouzas. Thanks for watching.